we've been having this conversation about how we are not seeing, interesting, as Dad wants to call it, fizzy, fizzy IPOs, coming into the exchange. Yeah. And Kengen was one of the fizzy IPOs where we saw the second day shooting to 49, as Easter has been referring it to. Yeah. Now, I'm of the opinion that most of the fizzy IPOs we saw, this is probably in the period, in the Kibaki times, okay, President Kibaki times. It was because government entities were actually divesting. Where you remember we had a conversation in episode 8 where Safaricom, the government sold its stake. That went public. That reduced. That stake, the government stake, is the one that was put up on the NSE. Yeah. Now it's the same thing with Kengen. So is it that the Kenyan capital markets has been largely dependent when it comes to IPOs on the government?
That's what history says.
It looks. We'll have to look at the. Of the stocks listed, like, of course, KCB, you would think it was a government stake that came to the market. Of course, Safaricom, Kengen, of course, Kenya Power,
KQ, Mumias.
Yeah, probably. But also there's a good portion, like in Absa,
Equity
Bank, Coop Bank, I think your Nation Media Group,
Scan Group.
I think there's also a portion that is also not necessarily, not government related. But I think Kenya's main issue for me is the activity by retail investors, especially the local retail investors.
It's very low.
It's very low, and I feel like that's where focus should be put, like in terms of people being able to own shares. I feel like this minimum requirement on the number of shares that someone could own is very limiting.
The 100.
Yeah,
you have 100. You have to own at least 100 units.
Well, anytime
you purchase, like, that's the minimum shares that you have to package.
Yeah, you see,
you have to purchase.
I'd like to believe that Kali, you're trying to compare the NSE to, let's say, the London Stock Exchange
or Nasdaq.
Yeah, where people can buy fractional shares.
Yeah,
but it's because of the maturity of these markets. Kenya is not that mature. The companies listed here, the stock prices are not that much, expensive. But if you go to, how much is an Apple stock as we speak? Very expensive. Yeah.
No,
even to them.
Yeah, even to them, but still.
So that's why that's the incentive for breaking these shares down, so that one can buy a fractional share.
No, it's the minimum.
I'm getting lost here.
It's the like
you can buy a half a share,
a quarter of a share.
But from Easter's argument that Apple shares abroad are expensive, shares here are cheaper. That's why there's no
affordability.
That's why we require a minimum number of units.
Like in Kenya, you can't own one share of
Safaricom.
It has to be 100 units.
One share of this Kengen at 5 bob. Why not?
Sorry?
So they should do away with that minimum.
Yeah, like why can't I own one share of Kengen at 5?
Those are things that take markets to mature so as you get to that point.
No, but that's efforts like this now make the help the market.
No. But Kalia, I understand now why they have that requirement, because it doesn't make sense does it make sense for you even as a broker? There are I think around 23 brokers that are certified by NSE. Would it make sense for you as a broker that somebody wants to do a transaction of 5 bob?
As long as you've put in your fee,
does it make economic sense?
You're going to have a big volume
as long as the revenue is more than the cost.
You're going to have a big volume of
5 bob.
The volume of shares traded is going to grow as a result. If you do proper civic education and allow people to be able to invest into the stock exchange with the little that they do have, because to be honest, the stock exchange is still, it's kind of a rich man's spot, an elite man's
in terms of perception.
Yeah.
Isn't perception what matters?
In terms of perception, and also in terms of
people
accessibility.
Perceive it as this is for very wealthy people, educated people. But you can own a share. You can. I mean, if you're right now, we're talking about Kengen. It closed at 4.5 times 100. That's 450 shillings.
Yeah.
Many Kenyans can afford that.
You see, I like how you that whole talk about affordability came from your side. Understand? So it's 450. Now, if you look at now where, again, Apple, that's the stock I was using. It's too expensive, man, to buy. Even for someone in the United States.
Yeah.
Yeah, because you cannot use Kenyan circumstances to judge the affordability of something that is being sold in the United States.
So it means
It's still expensive.
Yeah.
So it needs to be broken down. If you are to increase the market activity,
Yeah,
of
and
the
participation,
stock,
yeah.
you reduce the entry requirements. That makes sense.
It's
Geoffrey
actually,
Adundo, I hope would
Apple is
be-
actually trading at $144.
that's literally 10
Dollars.
yeah.
Look at that.
So that's 14k,
So
15k.
that I would like to again and
So basically,
the
what
On
Keegan,
Nasdaq,
what
that's
Keegan
on
is
Nasdaq,
saying,
yeah.
like their stocks, okay, Akina Kengen and the like would be affected because if you're to look at something like, which is it, BAT,
Yeah.
which has
400 and something.
so for 100,
That's 42k. You need a minimum of 42,000.
yeah, you see
Plus
now.
commission, broker's commission, like 50,000 to buy his stock.
So it means basically what Keegan is saying at the moment is kuna stock za mahasla na kuna stock za dynasty.
I'm not going to deny that. Yes. I'm not going to deny that.
But then the barrier, like the entries should be like, if I'm able to own 100 at this 400, that I'm going to own 100 stocks of Kengen, then I should be able to own like whatever that is 1 or point something percent.
You know, we can achieve that. We don't have to break down shares that to make them fractional. We can decide to aggregate buyers. That is, how many shares do you want? 5 shares. Okay, let's look for these other people who want 95 shares, so that you buy once. You buy it once. You understand? That's something that would be on the end on Geoffrey Odundo's desk that you can.
But then the operationalism of that, for me, I want to buy it now because right now I've just seen it's at 5 bob. So by the time you aggregate, probably itakuwa imefika
you have to
7 bob.
you have to accept that because you don't have the full amount, 500 shillings. If a share is going for 5 bob, because you don't have that money, your bargaining power is reduced.
Yeah.
So you don't go and start shouting, yet you don't have the money.
That makes sense.
Anyway, it's. I think it's all about innovation. I think
innovation.
there are things that can be looked into and things that can be changed to help make the stock market like be more appealing to everyone and have
even
more people
marketing. Even marketing. You see, people look at stock ownership as such a big deal.
Yeah.
They're like, I don't have the kind of money required to invest in stock
shares,
market,
yeah.
in shares. Yeah. So maybe if the NSE can do some very serious marketing and appeal to investors, to Kenyans, ordinary Kenyans, you can start. They did that with they had a challenge, NSE challenge for university students.
Yeah.
That's a good thing. I don't know why they're not pushing for it aggressively. But
then it was because I remember me when I was in campus, I was interested in like the NSE challenge, and it was good on paper. Like you get to analyze
on
stocks
paper.
and everything, but then I can't invest at that time. Like, yet at that point, you do probably as a student in Campo. Like there are many people who are in like two chamas, and they put in money like whatever amount per month into the chama. It could be a merry-go-round and whatnot. Yeah. But then they can't do this to the stock market because they do not have access. At that point, the amount that they're contributing to the chamas are considered too low for us guys. So that's why I'm saying it's like those barriers to entry needs to be like lowered as much as possible.
And that is not even just for the investors, even for companies. Do you know it costs so much to be listed on the Nairobi Stock Exchange? It costs so much. I was looking at the listing on Uganda Stock Exchange by this company, talked about it.
MTN Uganda.
MTN Uganda. The cost were over 10% of what they were going in for. So...
that's substantial.
It's even more in Kenya. For you to get listed, there's a fee. Like for you have to give to NSE for you to start the talks of being listed. And
you know that also your admin and legal fees are gonna shoot because now you have responsibilities, to put things out there, report out there, and many other things.
Yeah. Those corporate governance, adherence.
The corporate governance, those requirements. It's a lot. So there's also that cost that comes in.
That's why we have not so many companies getting listed as we would like to, and all that. I think
That's why
I've heard
people
that.
are going to private equity at the moment, because at private equity there is hand holding. Somebody's going to hand hold you. They're not just going to give you money, okay? They're going to help you advisory, what.
You're talking of companies.
Yeah, companies. Then you don't have to do all the disclosures that are supposed that you do at a securities exchange.
Yeah. So I think there's a lot to be done to get people
on NSE side.
Yeah, to get both companies, because companies are not listing on the NSE. So to get these guys to come on board, and then get also people now to start investing.